Welcome to the deep dive. Okay, today we're jumping straight into something pretty specific, a trading idea from Miss Mansi Suryawanshi. It's called Mansi's Trading Tip 38.
Right. And what's useful here, I think, is that it offers, some concrete rules, actual conditions for potential buy or sell decisions.
Exactly. Takes some of the guesswork out, maybe. It uses, let's see, three main things. ADX, that's the average directional index, and the RSI, relative strength index, but crucially on both the monthly and weekly charts.
Yeah, that multi-time frame aspect is key. So our mission, let's say, for this deep dive is just unpack the logic here, see how this technique works, how you might think about it.
Okay, let's get into it. First up, the conditions for a potential buy. What are we looking for?
All right, so rule number one, the ADX needs to be showing a value greater than 25.
Okay, ADX over 25. What does that generally tell us? Trend strength, right?
Exactly. It suggests the market isn't just chopping around sideways. There's some directional conviction there.
Yeah.
Then the second part.
The RSI?
Yes, the RSI. And this is important. Both the monthly RSI and the weekly RSI need to be reading above 60.
Both over 60. So strong trend and strong momentum on like the big picture monthly view and the more immediate weekly view.
Precisely. You need all three conditions met. ADX over 25, monthly RSI over 60, and weekly RSI over 60.
And if you see that, what's the action?
The suggested action is buy on mean reversion.
Okay, buy on mean reversion. Let's break that down a bit. What does that mean in practice, generally?
Well, it usually implies that you've got this strong underlying uptrend,
Yeah.
right? Confirmed by the ADX and those high RSIs.
Mm-hmm.
But the price might have just had a little temporary dip, a pullback. So buying on mean reversion here means you'd look to buy during that dip, expecting the price to snap back, revert to the mean and continue climbing.
Got it. So you're not chasing the absolute peak. You're looking for a slight pause or dip within a strong upward move to get in.
That's the idea, using that temporary weakness as an entry point within the bigger trend. Okay, so that's the buy setup.
Makes sense. Now, what about the other side? The conditions for a potential sell.
Similar logic, just flipped. First, again, the ADX needs to be greater than 25.
Still need that strong trend then, whether it's up or down.
Exactly. ADX just tells you about the strength, not the direction itself.
Mm-hmm.
But this time, for a potential sell, both the monthly RSI and the weekly RSI need to be less than 40.
Okay, so ADX over 25, but monthly and weekly RSI below 40.
Correct. And when those conditions align, the action is, you guessed it, sell on mean reversion.
All right, so applying the same logic, does that mean you're looking for a short-term bounce up within a larger downtrend?
That's generally the concept. The low RSIs on both time frames suggest significant persistent selling pressure or potentially an oversold state is developing.
Mm-hmm.
If the price then manages a little temporary rally, a brief bounce up, that could be seen as the reversion point, an opportunity to potentially initiate a short position, anticipating the main downward trend will resume.
So selling into that brief strength, expecting it to roll over again.
Pretty much. It's about trying to time an entry when the price momentarily goes against the prevailing strong downward momentum.
It's important to stress, though, these are specific rules within this particular technique, right? Ms. Suryawanshi's tip 38.
Absolutely. It's a defined system using these indicators, ADX for trend strengths, RSI for momentum, or overbought, oversold levels in a very specific way, combined across those two time frames.
Understanding each piece helps understand the whole picture. ADX strength, RSI momentum.
And applying it on the monthly for the big friend context and the weekly for maybe a more tactical signal. It aims for a more layered view of the market dynamics.
Okay, so let's quickly recap Mansi's trading tip 38. For a buy, strong trend, ADX over 25, plus high momentum, RSI over 60 on both monthly and weekly. The idea, buy a dip.
Right, and for a sell. Strong trend, ADX over 25 again, but this time low momentum, RSI under 40 on both monthly and weekly. The idea, sell a temporary bounce.
It's a structured approach using these technical signals to try and pinpoint potential entries where the price might just be taking a breather before continuing the main trend.
Exactly. It's trying to identify potentially higher probability spots by looking for that reversion within the trend.
Okay, so here's a final thought for you to consider. What extra layer of confirmation, perhaps, does using both the monthly and weekly RSI give you, compared to just relying on one?
Yeah, and maybe think about what other indicators or analysis methods could potentially complement this. Could anything else help confirm that the trend is likely to continue after that mean reversion point? Something to mull over.